Scaling up alternative protein production. What are the opportunities and challenges here? Here to talk about it, we'll have David Brandy, CEO and co-founder at Planetary Group. We'll have James Caffyn, partner at Lever VC. We have Arnout Dijkhuizen, investment principal at Astanor Ventures. And the panel discussion moderator, Mathilde Do Chi, CEO, principal consultant and vegan food law. And it looks like we're all set and ready. Please join me. We're ready for the discussion. Yes, applause is well deserved, well in advance. Please make yourselves comfortable as it gets. Make it engaging, interesting, informative. Enjoy.
Short introduction, and then I ask you to introduce yourself. Yeah.
We introduce ourselves.
No, sorry. So, hi everyone. So before I introduce our panelists, I'm just going to start with a short introduction about the topic. So 2 years ago, the space was amazing in terms of funding and new companies, but now the growth has stalled a bit. But it's also a prime time regarding opportunities, but they are also facing some challenges. And for that, I'm delighted to have an amazing panel of speakers coming from different horizons. So I'm not coming from the investment side or from the industry side. I'm a food law consultant and I specialize in alternative protein regulations and global food innovation. And I'm going to ask my panelists to introduce themselves. So first, David.
Thank you so much. So I'm David, I'm with Planetary, and Planetary is a bioeconomy startup based in Switzerland. We believe that, and probably share that opinion with many people here in the room, that the bioeconomy is really an opportunity of a lifetime. Planetary is both a production and then also technology partner for companies, startups, and also incumbents that want to bring products to market using microbial fermentation. In the first wave, we focus a lot on food. We'll talk about fermentation-based foods on this panel quite a bit. And then in the second wave, also on alternative materials that are being produced through fermentation. Thank you.
My name's James. I'm a partner at Lever VC. We invest around the world, about a third of our capital in Europe, a third in the US, third rest of the world, investing in the food and ag tech space. Traditionally, 100% of our capital went into the alternative protein ecosystem, anything from crop genetics through to fermentation technologies, cell-based technologies. With our new fund, we're going a little into ag, but the vast majority of our capital is still going to go into that food tech space. We invest occasionally pre-seed, but seed Series A is our sweet spot, following on into Series B and C afterwards.
Thank you very much. Hello, everyone. My name is Arnout Dijkhuizen. I'm a principal at Astanor Ventures. We're a European-based, but also US-based investor in Series A and B companies in the agri-foods chain, all the way from electrical tractors to alternative proteins and everything in between, let's say. We invest in Series A and B companies that bring a change to the system for more nutrition, for better sustainable production methods. And we've invested in many alternative protein companies, from insect proteins to plant-based burgers to, I have to say, Planetary developing fermentation technology as well, to whole-cut chicken with Umiyami and some other companies in the alternative protein space. And we're looking for natural solutions that bring a healthy and nutritious product.
Thank you so much. So now we're going to start talking about the opportunities, and I will first ask David to talk more about partnering with other players in the industry, especially as a co-manufacturing organization. So what are the opportunities you see in terms of scaling up alternative proteins?
Okay, so these co-manufacturers, or CMOs as they're called as well, I mean, it's nothing new, right? So it has been around and is around in pharma, for sure. Companies like Lonza do that, in electronics, also obviously in food. So if you have an idea, if you have a concept, it's pretty easy, or at least should be easy and fast, to go to market using an already existing, let's say, supply chain. And then it really depends on, I think, what sort of product you have. If you have build a brand, that's great. So get your formulation right, go to a co-man, you protect your product by owning this brand and advancing that. So I think that's pretty straightforward. If you're more of a technology owner yourself, then you might find yourself in a more tricky situation because you sometimes feel like, especially if you're early on your journey, you don't have maybe a protected technology. Maybe your technology requires specific equipment that the co-manufacturer doesn't have. So that is a bit of a, I think, more tricky assessment to be done, but ultimately it is an opportunity, I think, to go to market fast. And if you don't have a brand and have no technology, then I guess what are you doing anyways? So there's I think quite some resentment that we see from companies, especially in the early stage, to hold their technology tied to themselves, maybe because it's not so defensible yet, maybe also because there isn't so much built up yet in the first place. But we would like to encourage every company to just try to get to market as fast as possible. And if you can't afford building up the production infrastructure, then find a partner you trust. Usually production or co-manufacturers and let's say brand and product owners are pretty mission aligned. Usually a producer, a production partner doesn't want to launch their own products as well. So there are exceptions, but I think try to go out as fast as possible. Use the infrastructure that's there would be my advice.
Okay, thank you. And I also wanted to ask you about collaborating with the conventional animal industry. Are you approached by dairy companies or meat companies that would like to just enter the space?
Yeah, I think there are lots of public examples of companies that are basically, we heard this word category expansion before, so that want to innovate and yeah, so we help those companies through development of a bioprocess. So these companies typically have operated slaughterhouses or have been milking cows, frankly. So then we help them to develop a bioprocess and then also derive a strain and then produce that at different scales, and then ultimately, ideally, transfer that back to these companies because sometimes they already have a couple of infrastructure elements that for themselves can be helpful to produce at scale. So sometimes we're a right production partner, sometimes we're a right development partner, but not the right production partner.
All right, great, thank you. So now moving on to the challenging part, I would like to ask James to talk about CapEx.
Oh, fun. Yeah, so I think for any startup that's going through, we tend to finance before this is really an issue, but to scale up, the CapEx requirements is where you see a lot of equity financing starting to dry up. Very few investors want to put down equity financing to build plants, particularly if you're a venture capitalist. The return on investment for that tends to be a bit of a challenge. I mean, we've already just touched on one of the solutions. I think we've got a number of portfolio companies that are using CMOs to scale up. I think whilst it's very difficult unless you're producing incredibly high value ingredients to be profitable through that channel, but it's a great way to start to prove that your business model can work and your technology can work at scale. I think one of the biggest risks is actually sort of proving that out. The more time you can spend working with the CMO, there's going to be a big fee attached to that, which again, could start to come down over time, but that's going to sort of hinder the profitability. But being able to show that without that, you could run a profitable business, that's when you're going to start to get access to different types of financing. And we can maybe talk more about the use of bank debt, but as soon as you start to see more bank debt coming into this space, that's when you're really going to see an acceleration of the sort of number of plants being built, and then the proliferation of other forms of financing into that. I think from a VC perspective, whilst we've seen sort of capital pulling back from the space, if there are one or two companies that have proven out this model at scale, that they can produce a profitable business commercially, not only is that going to bring the bank debt in, but that's going to spur more capital to come in at the innovative stage. The other, which is where we push for a lot, is JVs. Now, again, CMOs is generally the quickest to work through because they tend to be a little more flexible, can move more quickly. But there are a number of large strategics from the AB InBevs of the world to the Cargills of the world who have significant fermentation capacity that sometimes needs to be retrofitting and a few things that can slow it down. But by forming partnerships, again, you're having to give away some of the margin in there, but it's yet another way to prove out that you can operate your technology at scale. And so for us, when we're working with our portfolio companies, trying to get them in front of the right strategic partners who have those fermentation assets, again, that's just another great way to prove out the business model and de-risk it a little further. 5-10 years out, sure, have your own plant, but I think going straight into building your own plant before you've proven your technology with a partner of some sort is pretty high risk and almost impossible to do in this climate.
Okay, thank you so much. So now moving on to opportunities again, I would like to ask Arnout to talk about emerging technologies.
Well, thank you very much. Emerging technologies. Well, let me just start off with saying, of course, from the investor point of view, the investor is not that sophisticated. In the end, what we're looking for is simple solutions that work at scale. The simpler the better, and I think that's where the collaboration with the industry comes into play as well. If you have a solution that's a drop-in replacement or that's something that can be adopted relatively easily and is understood by your customer, I think that's very important. And that's what we've seen with our company doing plant-based burgers in Australia. It's not to replace the meat per se. It's working with the meat industry indeed to use their equipment, which is already there, and get the plant-based burgers into the market and get a good market share. Now that we've seen that there is a bit of a plateau, let's say, into the market of alternative proteins here and there, it's interesting to look at alternatives to make it more efficient. Go to the second wave of plant-based, of fermentation-based alternative proteins, and get really in the roots of the system, working with the industry behind the scenes to transition and nudge the consumer into where they need to be. And I think there we see a very interesting maturity now getting into the industry, where there's indeed a second stage of technology coming on, which makes the foods more sustainable, more nutritious, because that's what the consumer is looking for. They're not looking for a long list of ingredients. They're looking for simple, natural ingredients. That's what we're looking for. To come back to your question, what do we see in emerging technologies? I think there's lots of interesting stuff going on into universities as well, into venture builders. There are more technologies that are enabling the adoption of alternative proteins. I think that collaboration that James was alluding to there is also crucial to get these products to market. To use IP not as a Chinese wall to keep people out, but IP in terms of intelligent partnerships. That's what we need. I mean, in the end, business is about getting people together, getting the smartest people together, but also the most effective people to get the change we need in the food system to reality. And so we should not be blocking each other by IP, but we should look for freedom to operate and freedom to collaborate. I think that's crucial for the success of alternative proteins.
All right, thank you so much. And then going back to the IP topic, I see a lot of companies struggling to get patents or gaining a patent for a very niche application. Or they are working on some technologies that are already patented, like sweet proteins, especially with Brazil. It might be difficult to work on an ingredient that is already protected. And for that, I would like to ask David to talk about better economic unity, like unit.
Unit economics? Happy to. Sure, I think so. Unit for us and the industry we are in, or specifically Planetary is in, unit economics is everything, right? So it's basically the purchasing the purchasing decision of a consumer is driven by its wallet, right? So they vote with their wallet. I think yes, the product might be more functional or might have other sort of flavor profiles that might be a bit superior to what you already see. But I think the consumer votes with the wallet, and then the quality and the consumer experience, that's a given, right? That has to be there anyways, otherwise it's not being bought. And then also, nobody really pays a significant upcharge on sustainability. That's, I think, a reason why many of us are doing what we're doing, but it doesn't move the needle in the shop floor, at least not for a significant enough audience or purchase group. So unit economics is everything, and also everything is in the unit economics. So you have all the production factors in there, of course, like your labor, your ingredients, your energy, but also your capex through depreciation and other factors. So it's absolutely important to understand your unit economics and also what you're competing against. I think if you're a B2B ingredient company, you won't like it, and we certainly don't like it, but you will be compared to what's in the market and on the commodity scale. So for example, how do you compare to chicken? If you're selling a protein or producing a protein? How do you compare to pea isolates? Or if you're lucky, TVP, if you're very lucky, wet moisture extruded peas. But you have to compete with those sort of ingredients, otherwise you have no market. You might not agree with it, you might say, yeah, but I have another functionality here and there, but the category manager, your ultimate customer, the people that move commodities around, they don't care. So that's the experience that we see from from the market. Now, if you're, I see you want to comment. Hold on. And then if you're more in a brand play, right? So again, fantastic. You can capture a bit more of the value chain. Of course, it's very difficult to build a brand and maintain a brand and so on. But that's a bit your way out. So I think really understand which market you're in and who you're competing with, and also understand how your unit economics will evolve over time. And if you'll have a business or not. I think it's that is. So we have in our company, you know, sometimes people come up with something talking about IP, like a great idea, and then they say, yeah, let's patent this, and then all the scientists go, yeah, we'll patent this. And my first question is, okay, what does that do on the unit economics? Like, is it even worth diving into this? I think this is a critical filter that has to come almost at the first step of the decision-making process.
Yeah.
Just quickly on that, I think some of the most interesting new companies we're seeing at the moment are those that are working, for example, within fermentation as a sort of pick and shovel play to come up with a technology that significantly reduces the OPEX or finds a way to produce more with less CAPEX. And I think if you look at the universe of ingredients that can be produced through fermentation at the moment, is, let's call it X, if we can lower the COGS by 30%, 40%, that just opens up a far bigger universe of potential ingredients that can be used. And I think whilst that's great for alternative protein, I think from an investor standpoint, the more ingredients around the world in food, non-food that you can produce through these technologies, the safer it is, and that's going to help us as allocators of capital get more comfortable with some of these deals. We've seen a couple at the moment which have got a significant cost reduction in the process. So anyone else working on cost reduction in fermentation, please come and speak to us, because it's something we're very, very interested in at the moment.
Thank you. And so moving on, I will ask you, James, to talk about governmental support. Like some countries, they have emerged as being more innovation friendly. Also with the setting up of food innovation hubs by the World Economic Forum, just like Dubai. So if you could give us your opinion about governments that are trying to make alternative protein more reality and to ease the path to the market.
Okay. So yeah, I think there's a number of different angles on this. I think you take Europe is probably one of the leaders in pushing support. So through the EIC, that is great. I think the challenge we have in Europe is you have the EIC that does a great job of pushing capital into the space to help support innovation. A lot of those companies then develop and then go and sell their product or develop in the US or elsewhere because the regulatory framework is just lagging. And so I think one of the biggest challenges is how you push those two together. The US has a better regulatory framework. It's a little quicker to market. It still needs to improve. But the capital going into the space is perhaps somewhat lagging, at least from a government standpoint. You see pockets through Singapore. Obviously, they've developed a great innovation network there. You're starting to see more coming out of the Middle East. I think it's a delicate balance of how much of that is an innovation hub versus just very big pockets of capital that are going to invest in companies and help bring sort of food security to the region. For us, we just want to try and line up how much capital they can push into the space to support it, but more importantly, how they can ease the legislation to help scale these businesses, to help them bring products to market. I think if you have a pretty uncertain pathway to market, that can disenfranchise a lot of investors who aren't quite sure when revenue is going to start coming from these businesses. So that's going to be one of the key challenges. The other is, are there ways to support one of the biggest sort of stumbling blocks, which is then actually getting access to finance for building these plants? And I think we talked about it slightly earlier, is there are a few philanthropic organizations that are coming in and saying, we will underwrite 60-70% of the offtake agreement for this new plant. That's great, but if it's one or two of these philanthropic organizations, they're not going to carry it. So if there are ways governments could help step in, as they've done with EVs and other sort of more climate-related areas, that's going to be something that really unlocks a lot of growth in the space.
It's interesting what you say on also path to market, not just access to capital. So what would you recommend, let's say, a portfolio company that has a path to financing in a Middle Eastern country, for example, let's say Oman or elsewhere, for a huge plant, but then probably little path to market? How would you see that?
I mean, it's the challenge of if you can, because again, they might be the path to producing there. What's the addressable market to sell into say, Oman, if that's the example we're going with here? Or is there the ability to produce there and then export? I mean, food is a very traded commodity. So if there is the opportunity to build a plant in Oman and then export the products into the US, it then opens up the challenge of, again, how are you going to get that product to market? Is it 12-month cycle before submitting if you're doing grass? It's going to very much vary on the sort of terms of the deal. But that being said, I think if there are routes to setting up facilities in areas of the world where the capex is going to be easier to manage, the debt on that is going to be easier to come by, and there's few strings attached in terms of where you can then sell the product, I think it's something that you're going to see a lot of companies moving towards, particularly when you look at just building a greenfield plant in certain European markets. In the US can sometimes have its challenges.
Because we looked at that, sorry, maybe you want to contribute, but we looked at that also specifically for fermentation-based opportunity, but then again, back to unit economics. It was still, even though the energy might be cheap and maybe the capex might bear a little interest, you would still be, for example, 25% higher than if you were to do it in, for example, India, where then the capex is more difficult to come by. So it's really quite a challenging question, I think.
Exactly, and maybe just to add here, I think we would all love to have government stimulate investments into production facilities, enabling a better adoption of capital into the system. But in the end, the best capital that's going into the system are customers, of course. So if we can nudge the governments also to make sure that there is an innovation adoption into big corporates, if there is innovation adoption in their system, let's say, of customers, I think, of course, that's the main enabler of getting this industry up and running and creating a big ecosystem of solutions within the industry and within the area that you're working in. So that's probably what we should be looking for more. And maybe coming to your next question on what should governments be doing, I think labeling is another issue with some of the alternative proteins. Given that a lot of these proteins have been protected by the existing industry, how do you label novel products that might have a very limited inclusion rate even in some of the products? We should make these kind of processes easier so that the adoption can be easier as well, and that the customer in the end benefits from a more nutritious or more sustainable product.
Yeah, sure. Like among the animal-based products, like milk is the most protected category because you had a lot of food fraud cases in the 80s and 90s, at least in Europe. So this is why you cannot call soy milk. You have to call it soy beverage or drink. And I agree that the governments have a bigger role to play to support the transition, especially when it comes to regulations.
But I think they're doing the right thing in the end, because a lot of the initial soy or oat drinks had a lot of sugar, for example. It makes sense that they're trying to work both ways.
Yeah.
But let's nudge into the right direction, not just block innovation.
Sure.
Soy milk is more sugar water anyways.
Yeah.
No protein, no calcium in there.
Yeah.
Well.
And it's also about, from a legal point of view, just like you cannot take away the prerogatives given to industry just to enable another player to sell like more easily. So in terms of labeling, there is a lot to do as well. And also some jurisdictions are seen as being very challenging. I mean, in terms of like gaining regulatory approval, like the EU. Because you have to find a middle ground between 27 EU member states. So this is why some non-European companies, they won't file a novel food dossier, for instance, in Europe, or even EU-based company, they will go to the US, for instance, because the system is faster and easier. It has also some drawbacks. No jurisdiction has the perfect system per se. But you have maybe some jurisdictions that are easier to enter and you have more opportunities than others.
Yeah, all I would say is I think I'm fairly confident in the coming years this will be worked out. I think what's more of a challenge is companies focusing on building out a technology service product that works at scale from an economic perspective and meets a lot of the quality requirements that consumers are looking for. I think you said it, the panel before said it, people don't like to sacrifice for the greater good. They will pay more for a product that benefits them directly, but very few consumers, as we're seeing with plant-based meat categories around the world, very few consumers are willing to come in and pay more for a product that doesn't taste as good. It's fairly simple. For us, that just creates an opportunity for the companies that are coming in with technologies and ingredients, et cetera, that can dramatically improve the quality of those products, can start to lower some and improve the economics of them. And we just view that very much as an opportunity. The legislation, the route to market, that side will work itself out. But if you're still shy on the economics and the quality, it doesn't quite matter what the legislation really does because the consumer's not going to buy the product.
Sure, fair point. Yeah, I talk a lot about regulation because this is what I do for a living. So I tend to see always the more difficult side, but you have like many opportunities.
We're optimists as investors.
Yeah. And so the space might be challenging at first, but it's filled with opportunities, and we just need more collaboration and more funding between the different actors. Yeah. Thank you so much. And if anyone has any question?
Sure, there will be at least one. Or am I too optimistic here? Do we have a question? Yeah, we do.
Thank you. So thank you actually for the nice discussion. Very happy also to hear James you from a founder's perspective. So I have only one question. So in this debate between scaling up, there are multiple options you were saying. Of course, CMOs. You can go also try to find a co-location partner. You can raise capex, etc. And there are definitely different things that they need to take into account. But maybe looking at James and Arnout's view on this. So there are multiple right now founders outside and great entrepreneurs and great companies outside that are maybe right now exploring in that debate what they do. Where do they go? What do they analyze? What should they review, etc. So which would be like your top recommendations actually for these great founders debating on this, to be able to assess based on maybe situations in the past or red flags that you have actually noticed in previous business plans that maybe haven't gone well, etc. So which would be your recommendations for these great founders that are actually in that debate?
Sure. Thanks a lot for this question. What would be the advice? Well, it depends, of course, a little bit on the stage of the company. I'm sure James has something to say about the early stage side of things. I think, of course, just to state the obvious, the big piles of gold that were flowing into the system have sort of not disappeared, but are a bit slower to be deployed for now. So building these big greenfield opportunities are just not an option. Just forget it. You need to go where the market is and where the partners are, and to make sure that what you have is structured in a right way, not just on IP, but also on the right business model, so that you're open to collaboration. You need to think it through before you go and just search for any sort of partnership. What is the partner that would add most value to your company? It's not a threat to any of your customers, because otherwise you're competing against yourself. These kind of questions need to be thought through, and I think it's important to gather around you a group of people that have a diverse set of mindset, not just investors, not just people from the academia, but different people from the industry. It's really a collaborative approach in the end.
Yeah, all I'd add is, I think, say you take a Series A company, I think and it's going to vary hugely about the process, the strain, everything around it, because it's going to rule out a number of assets around the world that you can use, downstream processing, etc. What I would say is, generally speaking, and it's going to vary, having a blended approach tends to work quite well, because working out a JV, as Arno said, if you can find the right partner who is going to provide you with the best economics to help on certain areas of the value chain that a CMO perhaps can't, that is perhaps going to be one of the most ideal ways to start scaling your company. The challenge is, as you know, that takes time to work out the details, and therefore having that sort of CMO partnership, almost in conjunction at the beginning, is actually very valuable, because if you're going to still be needing to raise capital, if you can go and work in 50,000 litre, 70,000 litre and start scaling up and showing that your bioprocess works at that level, that's going to help encourage investors to continue to invest in the business, whilst at the same time taking a year, 2 years to sort of iron out the details of some sort of JV with a major corporate. I think doing those in conjunction is often the best approach.
Yeah, we have like 4 well, let's say agreements with larger companies, and I think for every individual one it took 12 to 18 months to go from NDA to JDA, and that doesn't even mean that the work started at that point in time.
All right.
Yeah.
Arnout, you want to add something? We've got like 1 minute or 56 seconds, in fact, for the last question.
We can hear you.
Yeah. No, please use the mic.
Okay. Hi, I'm Andres Anton from Tomorrow's Bites podcast. Thanks for your time and sharing all your knowledge. I wanted to ask you, I might not be completely completely related to alternative proteins, but I think so because I see that alternative proteins are normally used in products that tend to be alternative products, alternative plant-based meat, plant-based cheese, however you want to put it. And my thought about this, my statement is that this is a limitation for the growth of the use of alternative proteins because it's a market where you will always be the second option behind the meat or behind the cheese, etc. So my question, since I see this as a challenge for it, how do you believe that the plant-based industry or the alternative in meat, cheese industry shall evolve in order to have a sustainable growth of this industry? Thanks.
Well, no, let's say B2C or product expert, but if you just look at like historical evolution of what we consume, I think 500 years ago people were just basically eating pulses and grains. Then through mass farming, we adopted the use of 100 years ago a meat-rich diet, and then also potatoes were strongly in the mix. Then you had cool chains and refrigerated cool chains, opening opportunities to also then consume, vegetables, fruits, and also dairy products. I think it's just a natural evolution, right? And I think in 100 years, or maybe hopefully sooner, we will consume exactly what everybody here is working on now, or maybe not everybody, but a good part of the people, hopefully. I think this is a natural evolution. The better products will be the ones that make their way to the market, and food systems and our food choices change drastically over time. If you just look a little bit back, it's not too easy, not too difficult to actually plot, I think, a way forward that will not see us eating exactly the same thing and the same choices. Consuming, not just eating, but also consuming same choices than the landscape offers you today.
Yeah, I think, are you sort of getting at the point of trying to basically produce new food categories? I'm assuming that's where you're going, rather than just trying to imitate meat. And we've seen a few companies do that. The problem is if you're trying to change consumer behavior and create a category, that's really expensive. Because trying to push consumers in a new direction, people don't like change that much. So trying to do that is really difficult. I think where the opportunity is, in terms of just shorter term, is just driving the quality of products up. If you look across the different categories, those where the arbitrage in both quality and price between the traditional product you're trying to replace and the new product coming in is low. So if you look at plant-based protein powders and things like that, those are the categories which have continued to grow very quickly. You look at plant-based milk, whilst it's a little binary, some people don't like it, the ones where you feel you don't have to sacrifice so much as a consumer, those are the categories that have really grown the quickest. So if you look across plant-based meat, plant-based cheese, as the quality of those starts to go up, there is the expectation that they start to improve.
And the final remark from Arnout.
Oh, thank you very much. I think it's a great question, by the way. Replacing anything. I'm a big proponent of just eating more healthy. You don't have to eat meat every day, of course. But I mean, in the end, there's a big system that needs systemic change. There's a lot of things behind the scenes. What are we feeding the animals or our pets, for example? There's a big transition that still can be made. Hybrid products are going to be a necessity because there isn't going to be enough meat to feed all the people on the planet. It's not a choice. It's a given. So we'll get there, I'm sure.
Thank you very much, Mathilde, for excellent moderation. David, James, Arnaud, thank you for the discussion and all the best.